So a few weeks ago, I was approached by Jimmy from Learn to Invest and asked whether I would be okay with him reviewing my portfolio. Now, I completely jumped at the chance because he is awesome. I've been watching his videos for a really long time, and if you haven't checked him out, then go and do so. His videos are brilliant. He really explains things in a great way and covers a lot of topics that I don't cover on my channel. I also thought it would be a great chance to have someone review my portfolio because I still consider myself quite new. I know I've been investing for about 1 year and 4 months now, maybe just over that, but in my eyes, I'm still learning, I'm still new. You know, I started talking about investing on my channel because I wanted to document my learning and everything that I learn and do. So yeah, I saw it as a great opportunity to get some insight. So if you want the in-depth analysis, go across to his page, and the video should be up now where he talks about my portfolio and his thoughts on it. And what I wanted to do was do a video in response, sort of summarizing what I'm going to do as a result of what he said. So he made some really good points, which really made me think that I need to change certain things in my investing strategy. So just before I jump in, I just wanted to say this doesn't mean that I'm going to stop putting money into the investments that I think are great investments. It just means that I'm going to slightly focus more on new aspects. It will make sense in a second, I promise. So one of the things that Jimmy said was that my portfolio was a little bit too skewed towards defensive stocks. Now, this wasn't really that surprising to me because my risk appetite has been very low over the last year or so. I hadn't finished paying off my debt and I was still sort of dipping my toes in, and I just wanted to go with safer investments whilst I sort of got a good grounding. However, now that I do have about 16k in safer investments, if you would, although I do have some riskier stocks, but it's probably about 5%. The first decision and thing that I'm changing in my portfolio is I'm going to focus a little bit more now on growth stocks and maybe a little bit more speculative investments. So in order to do that, there are a couple things I'm going to do. Firstly, I'm going to increase the holdings in some of the positions I already hold, and secondly, I'm going to add some new additions to my portfolios. Now, what I did was I used 2 out of my favorite tools because they are really good at finding new stocks, not just the analysis of stocks that you already want to look at. And those are Simply Wall Street and Genuine Impact. And I wanted to find some new stocks to invest in. So if I just show you what I mean by this, you can see here on Simply Wall Street, as an example, I have gone on the UK forecast high growth, and you've got a list of all these companies here that show you what is forecast to have high growth in the future. You can see it says companies that analysts expect to have high earnings, revenue or cash flow growth in the next 3 years. So I had a look through these, and then I also had a look through the Genuine Impact app. So again, if I just show you how that works in terms of finding things that you're interested in, you can see here you've got this Discover tab. And on the Discover tab, you can go through and look at top quality, best value, greatest momentum, tech, etc. You can read yourself. But you can see here that you can actually figure out what you're interested in and have a look. So I sort of went through and looked at the greatest momentum stocks and went through these and had a look and compared it to the Simply Wall Street. And then once I found some that I was interested in, I compared the analysis of the two. So if we take a look at an example, if I search here for Polar Capital, and then I filter it on the sector for financials, you can see here that out of 984 stocks on the list on Genuine Impact, it is 81 in quality, 755 on value, and 385 on momentum. And then on the checklist here, it does give a top rating for quality, top rating for share price stability, and top rating for expected growth. There's a lot more here that you can go into if you are interested, which just gives you a bit more detail on the ratings. So you can see here, for example, the dividend strength is high, as is the historical return. So let's have a look at it now on Simply Wall Street as well. So we've got Polar Capital Holdings. You can see here this big green bubble here. You can see that earnings are forecast to grow about 16% per year, and they pay a very high reliable dividend, which we saw over at Genuine Impact as well. It's currently trading below the fair value, and the only risk that seems to come up on the summary is that they've had a lot of insider selling over the past 3 months. So you can go into the details here, as you can see, and it tells you exactly who on the inside has been buying and selling, and you can go into details here. Anyway, that's just sort of a quick glimpse into what I did, but what I'm going to do is tell you exactly which stocks as a result I'm going to be increasing my holdings in, and then the new stocks that I'm going to add to my portfolio. So the holdings that I'm going to increase are Polar Capital Holdings, as we just looked at, AMD, which is quite funny because when I first got that as a free share, I was going to sell it, and then a whole bunch of you told me to keep it, and I'm glad I did. So I am going to be increasing my holdings there. Tesla and Amazon as well. And then I am going to hopefully look at putting a little bit more money into cryptocurrencies. Now, alongside that, I also want to point out that I will also be increasing my holdings in some ETFs. And the 3 that I really want to focus on are the FTSE 100, the S&P 500, and the Global Clean Energy. So I've spoken loads about the Global Clean Energy on my page before. You know that I think it's the long-term future with really high growth potential. So in terms of the new holdings that I'm going to add to my portfolio, there are going to be 3 new holdings that I'm going to add, and those are Argo Blockchain, which you would have seen in my free trade portfolio updates already, Blanco Technology Group, and Cohort. So again, this isn't really the place to go into the analysis or anything, but those are the choices that I have made based on wanting to go down the higher growth route rather than just the safer defensive positioning. I would love to hear if you have any other suggestions for me. If I do see something being suggested loads of times by loads of people, I will look into it. So let me know your thoughts down in the comments below. Now, the other thing that Jimmy mentioned was a little bit about currency. And this is something that I've actually talked about previously, and I've said, I don't really tend to think about it much. However, it was really impacting my Trading 212 portfolio at one point, and I'm glad that it's been brought up now. Basically, what I want to do is try to increase my holdings in UK-based stocks a little bit more, just to protect myself slightly from those currency fluctuations. Again, if you want the detail of the views around the US dollar versus the British pound, check out Jimmy's video. But out of those stocks that I mentioned earlier that I will be adding to my portfolio, I'm definitely going to try and focus a little bit more, at least initially, on the UK focused ones such as Polar Capital. So that's basically a quick summary of how I'm going to be changing my strategy going forward, essentially going into a little bit more risk and more growth stocks over the defensive stocks, as well as focusing a little bit more on my home currency. So let me know what you think. I love to hear your opinions. So yeah, hopefully this has been useful and interesting, and don't forget to check out Jimmy's video if you haven't already, and I'll see you in the next video. Bye.